ETF. ETFs are incredibly popular tools for investors, but what exactly is an ETF? It stands for Exchange Traded Funds. Still not sure what that means? That's why we're here. Think of an ETF as a bucket. In this bucket are a variety of different assets: bonds, stocks, commodities, other securities, or a combination of them all. All the things inside that bucket have a certain commonality. For example, the bucket could be filled with stocks from companies in the S&P 500. Or that commonality could be the agriculture sector, where your bucket is filled with stocks and bonds of agricultural companies, like those that produce corn, wheat, or dairy. It could be the Japanese market, where your ETF would be comprised of Japan's top companies. The point is that instead of investing money in one asset, when you put your money in an ETF, you're investing in many different assets all at once. And by investing in multiple assets instead of just one, you're minimizing your risk. You can invest in an international ETF that contains stocks of companies in India, Japan, the UK, and China. Or you can invest in one that includes thousands of different US companies, from the smallest publicly traded companies to massive established corporations. The more diversification, the lower the risk. Another perk of ETFs is that they're low cost. There's no dollar minimum you must put in to start investing, and you don't have to pay big fees to an account manager. Instead of paying someone to buy and sell assets within your ETF throughout the day, it simply follows the market index, basically a calculated set of rules that performs in accordance with the overall market. When the S&P 500 does well, so too does your S&P 500 ETF. ETFs also come with liquidity. You can easily buy or sell them at any time, and transparency. You can easily see exactly what's in your fund at any time. All these advantages are what's made ETF investments jump from $200 billion in 2003 to over $4 trillion in 2017. Investing in an ETF isn't difficult. You'll need to start by opening an account with an online broker. Different brokers offer different ETFs, so make sure the broker you choose has the ETFs you want. Connect this broker account with your bank account, and it's time to make your selection. When deciding on an ETF, be sure to check if that particular fund charges a commission, and also note the expense ratio. Both can eat into your earnings very quickly. Many brokers offer commission-free ETFs, and you should avoid any expense ratio higher than 0.5%. After doing your research on which ETFs are right for you, decide how many shares you want, make your order, and boom, you're now invested in an ETF.